Hello and welcome to Sibos 2018 in Sydney. I'm Hannah Wallace, and with me now is Daniel Schmand, Global Head of Trade Finance for Deutsche Bank and the Chair of the ICC Banking Commission. Joining us also is Dr. Rebecca Harding, CEO and founder of Coriolis Technologies, and we're going to be talking about trade wars. Hello to the both of you. Thank you for joining me.
Thank you.
Great pleasure, thank you.
Now it seems like no time at all since we were last here a year ago, where you both said how positive you were about the potential for trade to grow modestly and that the Belt and Road Initiative was a significant trade finance opportunity. But indeed, a year in trade is a long time. Yes, commodity prices have risen, which has pushed up trade values, but how is this playing out in the trade wars rhetoric? How are we doing getting trade finance to those that need it most? How is the BRI shaping up? And what is the outlook for trade now? Rebecca, coming to you first, how has trade changed since Sibos Toronto 2017?
So last year, Daniel and I were both fairly optimistic about trade, and actually trade has grown. So 2017 was a good year for trade. It grew by about 4.5% in volume terms, about 10% in value terms. So it was a good year for trade, and we thought it probably would be. What's happened since then? 2018 is really the year of trade wars, and trade has not perhaps picked up in the way it looked like it was going to at the end of 2017, even though oil prices have still remained at around $80 a barrel, so Brent crude prices. So I think we're seeing something with trade, but it's being held back a little bit by the political tensions.
I tend to agree.
All right, and isn't all this talk about trade wars just that, talk? What's really happening and how's it affecting trade finance?
So in terms of what's actually going on, there obviously have been tariffs imposed on iron and steel around the world. There obviously has been a tension between the US and China, and that is imposing tariffs again on certain products between the US and China. I think beyond that, actually, very little's happened, because if you look at the deals that have been renegotiated, they've just been renegotiated, and actually we've pulled back on several occasions from the brink of a full-out trade war. So some of this absolutely is rhetorical, and it's that's creating the uncertainty, I think.
I think you're absolutely right. What has changed on that matter of trade wars, I think clients and banks are a little bit more cognizant on what currency to choose. It might have different impacts on the type of bank you are. If you're a global bank, global trade flows are still there. If you're a regional or local trade finance bank, then you're more affected by tariffs, which are a very national thing.
All right, Rebecca, coming back to you, can you tell me what is the outlook for 2019 for trade and trade finance?
So 2019, I think, looks uncertain. Everything is there for the economy to start to grow and for trade to be stable as it always has been, except the political tensions that we're seeing. There is an amount of indebtedness around the world that's causing concerns as well. But it's this type of uncertainty amongst corporates that's actually beginning to create some issues around whether or not they're investing abroad. You're seeing that very clearly in the UK because of Brexit. 2019 will definitely be the year of Brexit. Certainly from a UK perspective, that's something to be concerned about.
Yeah, just picking on the Brexit topic. So we are Brexit ready. We are Brexit ready also for our clients. I would also leave that topic a little bit aside. Now, really looking into 2019 and what is new, what is next for trade finance. We've launched just at Sibos the Trade Information Network, the network to address the 1.5 trillion gap for SME financing. So that is to come off in 2019. That is hugely exciting, and we might see a big effect on trade finance just coming from that collaborative network the major banks have just created and announced at Sibos.
And of course, last year we touched on the 1.5 trillion US dollar trade finance gap. What progress is being made to reduce this, and how are we getting trade finance to those that need it most?
Well, from a sort of big picture perspective, I think the most important thing is that all the banks are now aware that this is a huge fault in the market. It's a huge imperfection, and it's something that has to be addressed. A lot of the issues of trade wars actually stem from the fact that small businesses felt excluded, large companies were doing well, smaller companies weren't doing so well. That obviously affects 90% of the population, and so plugging that gap is actually an essential thing if we're going to be able to drive trade, and I think that's been acknowledged. Technologies are being put in place, and that's extremely exciting.
As I said earlier, the network was created to particularly address that issue, and if you go back in the creation of the network, corporate clients, the large buyers, are more sensitive and cognizant of that fact. So the entire ecosystem, not only the banks, are moving to close that gap, to help the SMEs, to help the economies, because there's a counter effect. Also, those SME create demand in itself. So there is a big push from single networks, broader networks, but also the collaboration with multinational institutes like the Asian Development Bank to particularly focus from multiple angles now to really tactically address the matter and close the gap.
And of course, there's a lot of noise about technology. So would you say that digitalisation is the solution?
Digitalisation is a word. And you have to remember that technology is a tool, it's not an end in itself. So there's a lot of talk at every event, everything you go to about certain things which are going to be a panacea. I think it's very important to use technology in a way that solves a problem, like the 1.5 trillion funding gap for SMEs. Technology and data flows now offer us a wealth of opportunities, and that's what we need to grasp, and we need to use that in an intelligent way to achieve an objective.
And yes, that's actually a hot topic, but we should at no point forget you need first to create underlying flows which you can finance. Then the digital and the technology kicks in to make it as smooth and easy to address the topic. But if there's no trade between countries or counterparties, you can have the best digital solution, it's not going to sort that issue. Digital and technology sorts the issue of effectiveness and efficiency, but not the underlying commercial trade.
Fantastic. Well, Rebecca, Daniel, thank you so much for your insights. It's been a pleasure.
Great pleasure. Thank you so much.
And thank you for watching.